Hey, good morning, everyone. Happy Monday. It's about 7 a.m. here, January 20th, and prices of BTC currently at 86.30. Okay, so let's look at the smaller time frames and large. Let's check out how the weekly closed, and let's see how the outlook looks for the rest of today and the rest of the week. Okay, so let's get to it. On the 30-minute chart, what we see again is essentially a five-wave completion up here and maybe a, A, B, and then a C drop. And we might be in the middle of a new count, which could be, your maybe one up here, two pulls back over here. Although I think this two kind of negates this one because it goes lower. So I don't know if this is the real count. So it could very well be that this is A, this is B, and then C leg might be coming up again, okay? It's hard to say exactly where we are. This is why I've kind of let price do its thing. I haven't been in a single trade since I let go of my long up here, okay? It was also kind of hard to say if this thing was going to drop from up here. Any person who said it, they could easily predict that it had to drop. I really think they were kind of lying to themselves, or really they just, statistically had the odds against them because of the fact that, we were so aggressively sort of heading into this area. Knowing that it was going to drop in this block was a little bit easier to predict. Knowing where exactly it was going to drop from, that was a little bit harder, okay? This blue area right here, as we know, was the area of key resistance, okay, key supply, all right? So let me actually refresh this page real quick. And the reason why I want to explain it to you as a key supply block is because, as I've said before, right, technical analysis and price action is much easier to determine exactly where price is going to go, where exactly, the key areas of support and resistance are. All those are determined by previous price action too. Okay, aside from that, we can then start laying on fibs, other indicators of exhaustion, or start figuring out in terms of volume what exactly price is doing, and then we start to come up with a more clear picture of how exactly price is going to react to certain areas. Are we seeing buy side exhaustion, sell side exhaustion? How are the fibs looking? Is the volume looking? Maybe even the RSI or the money flow index, all these little things, or even the high volume nodes. All these little things sort of give us a better picture of what exactly price could do in certain areas. Okay, so for the most part in our group, what we were looking for is a $9,000 and $9,300 area for a top. Okay, there was no way I was going to hold on to this thing all the way deep into this area. I was definitely going to cut it for profit anyway, but it happened sooner than later. Okay, and that's fine. And we got out of our long, and then the rest we actually got stopped out in profit. All right, and now what we're really doing is we're waiting to see exactly how much strength the bears have. As you can see, the bears are already pressing the prices back down into this demand structure. Okay, this demand structure comes right here, this yellow block right here, comes from June 13th and 14th. Okay, so this area of consolidation, all right, we call this demand because we had this as consolidation right here, and then a big push up, comes back to retest it as support right there, pushes up again, support right there, pushes up again, support, and then it just never looks back and takes off all the way to about 91.50. Okay, so all this happened, this 4 or 5 days of price action over here happened, and then price again came back to that same area. Okay, that is very typical for price to do that. Why? Because once all the profit taking has been taken up here, all right, by bigger players, the price is hard to maintain up here, all right, if there are smaller players left in the market, okay, trying to hold up the price or trying to push it higher. Because remember, at the end of the day, you and I really don't have that much effect on price action, all right? We are essentially barnacles on the whale, if you will, and we're trying to ride along for the ride, wherever they're taking us, okay? Because typically, we generate impact in terms of creating tops or bottoms in a sense that, When we create tops, that's because there's a lot of retail FOMO, a lot of new money coming in trying to drive up prices. But those prices are actually, when the retail is sort of buying on an uptrend, they're hitting a wall, a sell wall, a passive, sell wall, and all those buys from retail are being absorbed by professionals, okay? The hedge funds or the institutions, because they need to get out of their positions. And so once we keep hitting that wall, right, all these orders are getting cleared. And that means that retailers are buying and selling into these big sell walls. And so what that does is helps us indicate that, okay, well, it looks like there's not strong volume going up on the uptrend. That means someone is actually selling big, okay? Someone is trying to get out of their positions, all right? And so when we understand that's happening, it's best to sort of be careful in the market and realize that, hey, you might actually be buying the top, okay? Or you're in fact helping create the top. And that's actually essentially what happened in the 2017 or even this 2019 uptrend right here, okay? If you look over here, I wanna show you guys something interesting, okay? This is the CME futures chart, okay? So on the futures chart, if you notice, right, a significant amount of the volume actually went over here in this block right here, okay? Notice right there, highest volume right there, a lot of sell side volume recorded, okay? So that means that a lot of positions were actually closed out over here. And then even over here, of course, once you take the cumulative volume over here, there's a lot of selling happening into retail buying. And then this was also a large sort of distribution and a recumulation process, okay? So in this area right here, this descending triangle looking thing, let me make that a little bit clear, right? This structure right here was more than likely a distribution pattern, okay? This is called the descending triangle. The reason this is called a descending triangle is because what's really happening is price is consistently creating lower highs like that, and it's creating a base where at the bottom, right, there's a good amount of buyers here, okay? And every time price comes down here, price bounces up here, price bounces up here, but then eventually it flattens out and then it rips through that same area, okay? The reason we call that descending triangle a bearish pattern is because all the distribution that's happening, all right, the professionals are trying to do their best to not let the price just collapse down, because then they'd have to sell at a much lower price. So they kind of create a floor, help kind of guide the price back up to an area where they find it reasonable to sell, right? And get out of their positions up here, load up on shorts, and then let the price, move back down again. And again, it finds a floor, right? Guide the price up, get out of their positions up here, load up on shorts, take profit down here, and then let the price just collapse, okay? And so the reason I'm telling you this is because you need to understand when exactly the bigger hands in the market are able to drive up the price, what their goal or intention is, and how that sort of coordinates with the volume that you're seeing, the other open interests that you're seeing, and other factors like that, okay? So once you sort of understand what the larger goal is, and correlate that with, say, the funding rate, outstanding longs, volume, maybe even the money flow index, all these things give you a clearer picture of this could be a potential top. We're also coming into daily supply. So all these factors give you an understanding of, okay, just because we don't know that price will get rejected here, we know there's a higher probability that in this blue area right here, you definitely want to at least start taking profit. Stop sort of having that hopium of, we're just going to go straight up to 10,000 or 11,000. In this area, which is where all this distribution happened, okay, more than likely there's a lot of players sitting in this area to sell, or the professionals are sitting in this area because this is a high volume area where previous price action took place. And we know, for the most part, professionals like to act and carry out their orders in the higher volume areas. They cannot exercise 50, 100, $200 million sells, on a daily basis by just moving the price, $10, $50, okay? They have to guide the price up and take price and take profits consistently, okay? So this is how you understand the confluence of factors coming into play into one particular area, okay? All right, I hope that makes sense. So anyway, the point of explaining that, again, is the fact that we saw price collapse, okay? So basically what was happening was probably throughout this area right here and even up here, price was guided up here so professionals could get out of their positions, all right, which is their longs probably. And then the funding rate was starting to increase too. So they realized for the most part, okay, if we're holding our longs and we don't have enough strength to push this thing up further because the bears have a good amount of supply, right? What do we need to do? Well, we need to guide the price up, get retail to FOMO, and take the asset off our hands in this area. And then once the retail holds the longs way at the top, right, what typically happens? Well, the professionals are able to get out. Once price starts collapsing down, all you have to do is make retail panic a little bit, okay? And that comes by dropping the price, you know, $50, $100, and then it starts hitting stops all the way down. These stops and these stops and these stops and all these stops down here, right here, and down here, okay? This creates a big cascading event of one single, you know, 15, 30-minute candle that just sweeps through everything, okay? Everyone stops and it just rips through everything, okay? And this makes retail panic as well, right? So with that panic ensues, you know, more stops being hit, and more stops being hit ensues more panic. So then you get this kind of drop, and then you come back to an equilibrium of previous demand. And that's exactly what's happening here. So now we need to figure out if this demand is strong enough to help guide us back up, or do we need to dig in a little bit deeper into liquidity, maybe even down further? And one of my areas where I think there's still resting liquidity sitting is right there, okay? That 83.80 area. That is the last area. If you look anywhere below these wicks, that's the last consolidation before this big move up too, okay? Aside from that, you know, that's way down here for price action, which is like $8,000, $8,100. And I kind of doubt price will get all the way down here because this was the 4-day consolidation period or 3-day consolidation period before we had this big up move. And in that area, we actually had some of the highest volume up here, okay? So what that tells me is I don't think that whoever is pushing the market down has the strength to push it down all the way down here. I think they'll be able to push it at least over here to this 83.80 area, okay? And that will grab more liquidity and then potentially drive the market up, okay? So that's kind of my thought process. And again, like I said, I'm waiting just on the sidelines, trying to figure out what's going to happen, if we're just going to bounce up from this demand, or if we're going to go deeper for a liquidity hunt and then push up, all right? Well, let's get to the 4-hour. Another thing about the 4-hour, which I find interesting, is that if you look, right, even in this area, the volume had pretty much tapered off right here, right? And then the volume was kind of low even on this climb up, okay? So this was another signal for you to understand that, hey, a majority of the volume actually went into creating this high. And then we created another higher high, but not higher volume, right? All we did was actually create a higher high with lower volume, okay? This is your other sign to watch out for, that distribution might actually be happening, or rather that if volume doesn't step up soon, prices are not going to inch up much higher. It's probably just the fact that prices are getting weaker and weaker, okay? And then that's where you see this big sell side candle come in, and they actually see exactly what you and I are talking about right now, which is, hey, there's not that much volume coming in. We're stronger than these guys. So let's tank the market, create sort of a cascading effect of stops hitting other stops, panic, you know, ensuing more panic, and then you get this. It really just takes the tip of one domino to start this thing right here, where you have a sell order of, say, 1,000 Bitcoin, but then as this whole candle grows, it actually becomes 5,000 Bitcoin that gets sold because one stop rolls into the other, and then that creates, you know, $500, $600 drop, okay? All right, let's see here. The weekly open is actually a little bit higher, so let me change that. I'll say weekly open. New weekly open is 87.01, right? So let's change that real quick. And remember, like I said, I like to keep an eye on how the price is in relation to, or the current price action is in relation to the daily opens, the weekly open, the high, low, close, etc. Okay, so in this particular case, right, what we're going to do is we're going to change this up again, right? So we're going to go over here. I'm going to show you guys exactly why that's important, okay? So weekly open is now over here. Oops. Okay, weekly open is over here. And this is the week. We don't know the weekly low, but we do know the weekly high. Let's see here. Okay. Let's see. Weekly high. Okay. And so now that we know that, we go back to the daily and we figure out, okay, what's the new daily low? This is the new daily low. The daily open is a new one right here. Okay. All right, so the daily and the weekly open are essentially the same thing, it seems. Okay, so what we're trying to figure out is where price is in relation to those. Well, price is basically, you know, between the daily low, right, and the weekly open. Actually, I'm gonna get rid of this one. There's too much stuff happening on this chart. I'll just do this in a little bit. Okay, so daily open, daily low. All right, and then we're going to do this. Okay, this one is the daily high. I'm going to do this at the top. I'm going to do this one bottom. Okay, so that's where we are right now. Okay, price is right, you know, closer to the daily low. Okay, when we go on the 4-hour chart, right, it helps us visualize exactly where price action is. And if I had the weekly stuff on here, actually, let me just do the weekly stuff. Sorry, so I'm so unprepared right now, but it helps you guys understand exactly, you know, so if this is the daily high, this is also the weekly high, right? For now, okay, and then this is the weekly open, just bottom right there, and the weekly low. Okay, so what we see right now is price also had this trading range right here, okay? So let me pull this down a little bit. This purple area that you see, price was traversing in that trading range for the past couple of days, broke up above it, got pushed down right back into the trading range, and actually under the EQ, which is this white dashed line. And notice how we're sitting right at the bottom of the trading range. We haven't closed a single candle under that purple, you know, bottom trading range, right? So this is, for now, it's a positive sign. Now what we need to see is price sort of show a strength and get back above the EQ. So that's around 87.50 or so, okay? More importantly, if we start seeing strength for price to climb back into this ascending parallel channel, right, and get back in like this, then we can start talking about, you know, $9,000, $9,500 targets again. But until then, this is not positive for price to break a ascending parallel channel that we had, this green one right here, since January 2nd. So we were holding it for a good 16 days or so. And so the fact that price broke down under it, right, and it has spent now almost 24 hours outside of it, this is not a positive sign, okay? What could potentially happen is we climb back, get rejected by that same parallel channel, right? And this would be your opportunity for a short, because then this would mean that prices are going to collapse a little bit lower, okay? Again, we don't really know if that's going to happen, but for now, that would be the only way I would want to consider shorts, okay? Let's see here. On the daily chart, nothing really special. What I interpret from this daily candle is, number one, we got rejected by the 200 moving average, which makes sense, right? It's been a key area where price has gotten rejected over here once, twice, used it as support 3 times, and now it's using it as resistance, okay? But the more important thing about the moving averages, okay? So let me see if we can pull up like a moving average cluster. Average ribbons, okay? Let's see how this moving average ribbon. Okay, so if you look at these moving averages, right? Let's see which ones these are first. All right, so these are the 5s, 10, 15s, 20, 25, 30, 35, 40, all the way up into 95, okay? So I'm gonna turn off my 200 moving average, okay? Actually, let's leave that 200 moving average on. Here's something interesting to notice about the 200 moving average, okay? Notice that it's actually flattening out, okay? This is actually a positive sign for the fact that the moving average is flattening out. And notice something else that's interesting about the other moving averages. All of them have flipped green, anywhere from 5 to 95. They've all flipped green and they're now facing up, okay? This is a positive sign that tells us that, hey, we might actually be turning around, at least for now in this market, okay? This kind of stuff doesn't really happen unless the market is truly telling you that, hey, I'm ready to at least make a momentum shift. I'm getting squeezed between the 200 moving average and maybe, you know, this one's probably the 9, the 10, maybe the 15, 20, something like that. So price is getting squeezed between these moving averages, and eventually, you know, if price is really supposed to push higher, it will slowly grind its way and break the 200 moving average. And then eventually the 200 moving average will start sloping up, okay? So the fact that this is happening, in my opinion, the moving averages are giving you a sign that the market could be potentially turning around, okay? Now again, as I've stated before, right? If you look at this chart right here, okay? Let's go on it on a weekly, right? The big parallel channel that I've been watching for a while was this one right here, okay? The fact that we closed this candle right here outside of the parallel channel is a very positive sign. I mean, this is very hard to deny that this is a positive sign, right? But now what we need to do is see follow through, okay? You don't just want to break outside the parallel channel and then collapse back into it, okay? That would be a very negative sign, all right? And that would almost ultimately mean that we'll probably at least head back to these lows, which are 64, 6,500, or maybe even lower towards, you know, my final target that I've been talking about, around 5,000, 5,500, okay? So you don't want prices to come back inside this parallel channel, all right? And the parallel channel, if prices went straight down today, will be about 8,250 or so, or $8,200, all right? So we still got a long ways to go, about a $400 drop. But again, like I said, you don't want to come back inside the parallel channel, right? Let's see here. The money flow index is still moving up on the weekly, positive sign, right? Volatility, flattening out for now, but still, you know, pretty high in terms of Bitcoin, which is exactly what you want to see. Typically when volatility starts flattening out for Bitcoin, that's when you know a big move is going to come, okay? Let's see over here what we got in terms of indicators. On the daily chart, the MACD is looking like it wants to make a bearish cross. So not the most positive sign, but again, it hasn't even come anywhere close to making a cross yet, making a bearish cross. So we'll have to see, all right? Daily, the Stochh RSI did hit overbought. Now it's coming down to cool off. Same thing with RSI, hit the overbought territory. Now looking to cool off. So all the indicators are telling you that, hey, there might be time, it might be time over here for a pullback, maybe settle down for a couple days and then maybe push back up, okay? So that's kind of what I'm waiting to see. Another good way to see this is if you look at, you know, this area right here. Let me see if I drew this out. Actually, you know what, I could draw this out over here, okay? Get rid of this. I like to draw it from this wick high because I think that first large wick that you see is more of an anomaly. This is just too much, you know, happening all the way up there. But a lot of the stuff is actually a lot of, you know, key supply right here. Key consolidation is happening in this area, okay? So that's why I'm leaving this wick alone. So this supply right here, this yellow box right here, right? If you look, all price did was tap into this supply, and now it's tapping into this blue demand, which was previous resistance, as you can see right there. Previous resistance, busted through that with high volume, boom, came back down, tested it as support, right? So all I can say is we're really trapped between this high and this low. Okay, this is really our trading range for now. Let me be a little bit more clear with it. Okay, so really this is the high and this is the low. Okay, so our low is about 8,500, our high is about 9,150 or so. Okay, so that, you know, $600-700 trading range that we're seeing right now, right there, is essentially, you know, what we're trapped in, I guess. We're trying to figure out if we're going to go lower or if we're going to go higher. But for now, it's really hard to determine exactly what we're trying to do. But the fact that we're sitting right on top of demand is a positive sign, in my opinion. Okay. Let's see here. There is still a gap, obviously, as you guys know, left on the CME. Again, gaps are created because of the fact that markets like the CME close in after hours or for the weekends. And then because Bitcoin is a 24/7 market, it's always moving. So by the time the CME opens on Sunday at 6 p.m. Eastern Standard Time, you know, prices create this gap. Okay. Now, I think the statistic is that 95% of gaps in Bitcoin, as per the CME, have gotten filled. So there's a very high probability that this gap right here, which is right around 8850 or so, okay, will get filled at some point. And I think the other statistic is that 83% of the time the gap gets filled within the same week. Again, I read this on Twitter. I put the post up in my announcements page for my Advantage members. You can go check it out. So anyway, point is that this gap has a higher probability of getting filled, okay? But it's not a necessity that all gaps should get filled, and nor is it a necessity that gaps have to get filled during a certain time frame, okay? That's not how it works in traditional markets. It just so happens to be that in Bitcoin, maybe because it's a smaller market, the CME players are able to control the price, get out of their positions, because when a gap happens, right? Say for example, if the CME traders were long up here, okay, and then over the weekend, the price dropped this much. Well, if the price dropped, they're sitting in losses, and this gap right here is essentially, you know, where a majority of the losses are sitting, right? Because if they were long up here, right, even if they saw the price drop right around closing time, which was the low of 89.55, right, they would say, okay, maybe in the weekend, price might come back up here. But if it doesn't, if it drops down here, what they want to do is close that gap up, get out of their positions, and then let the market do its thing, whether it's going to go down or whether it's going to push back up, okay? All right, I think I've covered a decent amount. Let's see here, it looks like prices, again, heading back down, as you can see. So, you know, one thing I said was, you don't want to keep hammering onto this demand right here, okay? The reason why you don't want to keep doing that is because there's only so many buyers left in this area that are going to sort of push this price up, okay? And if they don't push this price up, right, the price is going to eventually collapse. And if it does collapse, like I said, the next likely area is this 8380, you know, resting liquidity area right there, okay? Aside from that, I think that pretty much covers it. Talked about the trading range. We talked about the different indicators that we were looking at, money flow index. Let's see how the MFI looks on the 4-hour time frame. Let's see here. Yeah, so this is another thing that I spoke with my community about, is when we started seeing the MFI turn right here, I said that this is where things are going to get a little bit, you know, more uncertain. Okay, and that's exactly what happened, where we didn't really know what it means to cross the green band right here, if it's going to just bounce off the green band and push up, or if it's just going to rip through. And notice now we can see the red bands, the selling bands, which denote price action being more bearish, as well as volume being more bearish. Because remember, money flow index is nothing but the RSI plus volume. RSI is just, taking into account price action. Money flow index is price action plus volume. Okay. So let's see here. I think that's pretty much it. I think I covered a lot. Again, folks, if you are not part of the Advantage community, we do still have our 50% discount off for first-time members. Just shoot me a message right here. You can buy the 1 month or the 3 month memberships. Get it while it's hot. Come make some gains with us. All right. And I'm out. Hope you guys come join. All right. Cheers.